The dollar, 100 years ago in Miami Beach, an acre of land on the waterfront cost $10,000. Today, $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy. And it's going to go fast early on. It went really fast the first decade. It's been going 50% a year ARR for the past 4 years. My view is Bitcoin's going to appreciate 29% a year ARR for the next 21 years, right? That's my base case.
Which takes it to what? What's the dollar figure on that?
13 million.
Per Bitcoin.
Yeah.
Saylor begins by comparing the decline of the US dollar with other weaker currencies and tangible assets. He notes that an acre of waterfront property in Miami Beach cost $10,000 100 years ago, but today the same land is worth $10 million, a 99.9% loss in the purchasing power of the dollar against real estate. Similarly, the Mexican peso lost 99.9% of its value against the dollar in just 20 years. Saylor frames these declines as evidence of how capital flows from weaker assets to stronger ones. He argues that Bitcoin is the next phase of this evolution. Just as investors moved from weak fiat currencies to real estate and equities in the 20th century, capital is now flowing from physical assets into Bitcoin, a 21st century digital asset. According to Saylor, Bitcoin's rapid growth, averaging 50% annual returns over the past decade, reflects its potential to outcompete traditional financial instruments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The dollar, 100 years ago in Miami Beach, an acre of land on the waterfront cost $10,000. Today, $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy. And it's going to go fast early on. It went really fast the first decade. It's been going 50% a year ARR for the past 4 years. But as the 1 trillion equalizes with the 400 trillion, and this becomes 200, when this becomes probably this 450 trillion will become 700 trillion, but this 1 trillion will become 100 trillion. And so as this becomes a fraction of the 20th century economy, the difference between the cost of capital in the Bitcoin universe, which is 50% right now, and the cost of capital in the dollar universe, which is about 12 to 14%, look at, basically that's the return of the S&P. So the S&P sets the cost of capital for traditional conventional assets, and Bitcoin is the opposite. And so Bitcoin is like 3.5 times the S&P, and it's also 3.5 times the volatility. Look at DVOL, Bitcoin volatility, 55 versus the VIX. And so if you look at the two, it's not a complicated thing. It's a thermodynamic idea that any physicist will tell you, this is a hot fluid, this is a cold fluid. I pull up the gate and I mix the fluids, and how hot is the bathtub? It's somewhere in between, right? The temperature is going to be in between scalding hot and freezing cold. And in the middle, if there were some ice cubes in this one, and I release scalding hot water here, some of the ice cubes are going to melt, but you're going to end up with a warm bath, with the exception that there's always going to be, you know, if you look out 10 years, instead of 50 vol versus 15 vol, maybe it'll be 45 to 40 to 38 to 36 to 32 to 28. This volatility is coming in. This ARR is coming in. Now this comes up because what happens when Apple and Google and Microsoft and Facebook or whatever, when they buy Bitcoin? What happens when you could take the bottom 98% of the S&P 500? If they bought Bitcoin, their performance would start to approach the big tech. And so the performance of the S&P index will move toward Bitcoin as they put Bitcoin on the balance sheet. Bitcoin performance will move toward the S&P as we move from, you know, a 100 to 1 ratio to a 10 to 1 ratio to a 5 to 1 ratio. And these things equalize. But you know, if you understand it as thermodynamics and collapsing into a more efficient energy state, like how is it not more efficient to be able to teleport a building 60 times a second between New York and London? Like that's efficient versus your family made an investment in London 30, 40 years ago and they changed the law last month and now you're going to lose all your wealth. That's inefficient, right? So Bitcoin is the digital transformation of capital. MicroStrategy is just a business taking advantage of the digital transformation. But if I was talking to Apple, I would say don't buy back 100 billion of your stock. Buy 100 billion of Bitcoin. It will go to 500 billion. You'll have a $500 billion business growing 20% a year. You'll make 100 billion in investment gains a year. Your investors will look at it and they'll add $1 trillion or $2 trillion to your market cap. And now the company will be valued 60% based upon the operating business, 40% based on the balance sheet, right? And the risk will shift because the risk in a conventional company is the balance sheet's worthless and the company's valued based upon the P&L. And so if you make $1 billion a quarter, I basically value it at 20 P to E. So I take the quarterly result, I multiply by 80, and I say, oh, you're worth $80 billion because I took 1 billion and multiplied by 80 and the balance sheet's worthless. But the next quarter I say, well, my billion went to 0. Well, that's 80 times $1 billion change. You've got a massive whipsaw. That's why these companies' stocks crash. If the company had $40 billion of tangible assets on the balance sheet, and it was that puts a floor right on the equity, and really what you want is you want a well-balanced company where, I mean, it's like Harvard University or Yale. They're not valued based upon the earnings of this semester of freshmen entering Harvard. They're valued because they have 18 billion in the endowment, you know, and if they close the university, they're still rich. They have 18 billion in the endowment.
Saylor reiterates that the real challenge for companies and investors is to shift their mindset toward the digital transformation of capital. He compares Bitcoin's potential impact on finance to the Internet's impact on information and communication. Companies that embrace Bitcoin will not only enhance their balance sheets, but also position themselves as leaders in a rapidly evolving financial landscape. MicroStrategy's strategy, according to Saylor, is built on 3 key pillars: the amount of capital it can raise, the intelligence of its investment strategy, and its forecast for Bitcoin's future performance. While skeptics argue that Bitcoin may not appreciate, Saylor remains confident that its value will continue to rise, driven by growing institutional adoption and improved accounting standards.
You got to look at the balance sheet and say, okay, that's one component. They've got this much Bitcoin. And then you got to look at the P&L and say, well, how much investment income can they generate? So if the company gets to $50 billion of Bitcoin, and if Bitcoin goes up 20% a year, the company generates $10 billion a year of investment income. And that compounds 20% a year. So if I said to you, hey, here's a big tech company that makes $10 billion a year, and they're growing that 20% a year, how would you value that?
I mean, through the roof, right?
There you go. So it's not very complicated. The thing that's held people back is we've used indefinite intangible accounting for the last 4 years, and it's not until 2025 that you actually start to do fair value accounting. And when you start to do fair value accounting, you can actually see investment income, and you can see the income potential. And so it's not complicated to figure out what the balance sheet is. Everybody knows, 252,000 Bitcoin. The complicated thing is to grasp the idea of a company that issues securities backed by Bitcoin. And the real franchise the MicroStrategy has is we're the leading issuer of Bitcoin-backed securities. So the question is, how much capital can we raise? How much permanent capital we have? And the second question is, how much leverage will we use, and how intelligent will it be? And the third question is, what's your forecast for Bitcoin, right? And so there's three variables there. If we borrow $10 billion at 7% and we invest it in Bitcoin and Bitcoin returns 21%, then we scrape 14% arbitrage on 10 billion. We make 1.4 billion a year in the swap. We roll that into the business, and then 10 years out, you've got a $50 billion business, $50 billion in capital, and you're generating $10 billion of investment income just off of that one piece, right? But it all comes down to, what's the nature of the capital, how much can we get and raise, and then how will we invest it, and we'll be responsible. The haters, right? The haters think, well, Bitcoin's just going to go up 0% a year, right? So of course, from their point of view, the balance sheet's going nowhere, and if Bitcoin goes 0% a year, you can't raise any capital, right? So if that's your forecast, you're not that interested. My view is Bitcoin's going to appreciate 29% a year ARR for the next 21 years, right? That's
Which
my
takes
base
it to
case.
what? What's the dollar figure on that?
13 million.
Per Bitcoin.
Yeah. Okay, and so what do you think my shareholders think? Well, my shareholders are pretty bullish on Bitcoin, right? There's no one buying MicroStrategy that hates Bitcoin.
No, they're shorting it.
Yeah. So at the end of the day, the methodology would be figure out what's your forecast for Bitcoin. By the way, you can go to Google, type Bitcoin 24. And you'll find the Bitcoin 24 open source model. It's a 21-year model. You can download it. It's a spreadsheet. You can put in your forecast for innovation rate, inflation rates, all the asset class, monetizations, demonetizations, Bitcoin assumptions.
Supply, all of it.
Yeah, you can put that all in, and you can run your model, and you get your own answer, right? So do that. So if you look at the capital markets, you've got $900 trillion of wealth in the capital market, and you've got this wealth, you've got people invested in all these heterogeneous assets. Why do 98% of the companies in the S&P 500 not perform, right? How come 1% of all the returns come from like 7 companies, right? What I talked about if you study the convertible bond market, someone issues a convertible bond, it takes them 5 years for the investors to figure out whether it worked. And then when they come up with a new convertible bond, it's a different credit proposition. It's very inefficient, right? If you think about preferred stocks, very inefficient. Junk bonds, very inefficient. Private credit, very inefficient. Fixed income, people get very low yields. What if I'm getting this yield and I'm taking all this credit risk and counterparty risk? So of the 900 trillion in capital in the global capital markets, half of it is just long-term store of value, long-term capital. That is pure capital. People with money just want to keep their money. Rich just want to stay rich. I give you an organization $1 billion in the endowment. You just want to not lose the $1 billion.
Precisely.
Right? So that 450 trillion is invested in buildings that are rusting. It's invested in cars, it's invested in fleets, it's invested in things that suffer from 20th century risk factors. Credit default, war, tariff, tornado.
Tax.
Like you had a good business at Kodak and your family had all their money in Kodak, and then what happened? Or you own Xerox, and what happened? Then you own the best business in Ukraine, and then there's a war. That happened. Right? I could give you 10,000 examples of risk factors that destroy wealth. So you've got that, 450 trillion on one side, and then you've got 1 trillion digital capital. It's like, well, I had a building. I get rid of all the things that make the building a problem, and I make it an invisible, immortal, indestructible, teleportable digital building.
That'd be cool.
Okay? Well, that's what Bitcoin is.
Michael Saylor provides a masterclass on Bitcoin's role in transforming the global financial system. From the decline of fiat currencies to the inefficiencies of traditional corporate finance, Saylor makes a compelling case for Bitcoin as the future of wealth management. As adoption grows and accounting standards evolve, the distinction between digital assets and legacy institutions will blur, creating new opportunities for companies and investors alike. Whether you're a business leader or a retail investor, Saylor's message is clear. The time to act is now. Bitcoin is not just an asset, but a revolution in capital management.
Please like and subscribe my channel.